My name is David Simons. I'm a venture capital investor with GSR.
Dave, welcome to the Future of Money, our series. GSR is a global firm. You're specializing in market making, and the firm has been in the service in the crypto industry for 10 years. So give me a little bit of sense of what your journey has been.
I've joined GSR about 2 years ago. My career started in traditional finance, as with many that came into crypto. I initially started out as a M&A banker, worked at Evercore, specializing primarily in technology, media, and telecom. Moved over to Goldman Sachs. We're focused on the same thing, really, advisory for primarily telecom companies. Caught the payments bug a little bit during the fintech boom in 2021. Moved over to a payments company called checkout.com, really specializing in internal M&A there, strategy, and a bit of product. Checkout did a lot of crypto during that time and kind of still today. I wanted to immerse myself fully into a crypto native firm, and that's kind of how I found GSR. Like I said, I've been there for 2 years, been an amazing time. And yeah, still to this day, look forward to staying in the digital assets industry.
Tell us what you think the thesis right now is, where you believe the industry is, and having been around a few of the fintechs, what's the big picture? What is the landscape we all experiencing right now, and what's your firm's point of view on all of that?
Sure. That's a great question. When we look at the digital asset space, we tend to group things very much together as kind of crypto, like, 2.7 trillion asset class. And I think there's various angles of where this technology can be incorporated. So my particular interest is very general to digital assets. I see blockchain technology as an enabler of kind of cross-border and global settlement. So whether that's real world assets, crypto native assets, even speculative assets like meme coins, payments, it's just a much better technology to enable transfer of value, right? So my perspective and thesis in terms of where at least I'm investing in is in core underlying technology that makes value transfer more seamless and cheaper. So whether that's optimized L1s, L2s that are solving scalability and cost issues. And of course, more on the application layer. So whether that's actually businesses that are enabling the adoption of these technologies, right? So I do focus a lot of time on stablecoins, and we've invested into various implementations of stablecoins, whether that be fiat-backed, more in the traditional sense, yield-bearing stablecoins, or say non-bank stablecoins. We've seen also implementations there. That really excites me, and I think that's a key use case in crypto digital assets is really either tokenizing or representing fiat money. So that's just personally me. The firm's focus, GSR, is, and again, these are my views, I don't really speak for the firm on this behalf, but the firm is a crypto native player and liquidity provider to all businesses in crypto. So we provide liquidity on the leading centralized and decentralized exchanges. We're ecosystem agnostic, really supporting many token issuers in the space. And the firms, I think we all share one view, is that this asset class will grow, that the technology adoption will grow. And we want to be just responsible ecosystem partners. And from our investment perspective, we want to be thoughtful investors that are helping proliferate this technology. Obviously, from the digital assets industry, with a lot of intention, especially for institutional investors right now, is kind of Bitcoin and the ETFs around Bitcoin that's seeing a lot of inflows. There's obviously a lot of interest in more kind of speculative assets. And I think that's not also to be dismissed there. But what we've, I think, really seen fundamentally from, say, kind of the 14-year history of crypto is really the rise of stablecoins. And I think that is a fantastic use case of crypto that's found product market fit. We see tremendous volume just across the industry. And what is the point of stablecoins? And I think where does it really see adoption, right? My personal view is that if we talk about developed markets, for example, US and Europe and Australia, the actual use case of stablecoins and crypto doesn't make much sense because payment systems are fairly well regulated. They're fairly stable. Things work well. Where we start to see a lot of use cases actually in developing markets and what people today call the global south. And the reason for that, I think, is two or threefold. First of all, there's been a trend of fragmentation in the payments industry. So every single country, if you take India or Nigeria, Southeast Asia, countries are kind of tightening their capital controls and actually nationalizing payment systems, right? So in India, you have kind of UPI, in Nigeria, you have the bank transfers, and there's a huge fragmentation of various local payment methods, right? So it becomes very difficult to transact globally if you're a global merchant. So where do stablecoins come in? And in a lot of these markets, and if you look at kind of Nigeria as an example, USDT liquidity is actually much higher than dollar liquidity. So it becomes actually a pair that global merchants are able to trade and enter in and exit local currency. So stablecoins become like a unified layer that connects various payment methods globally and really enables cross-border payments, right? And this is kind of not seen right away, but once you start looking into the data under the hood, we see I think this is a phenomenon of like medium-sized businesses, medium to larger sized business, not like huge enterprises, but there's definitely like grassroots adoption of stable coins. I think we'll only see that further, and especially once we get more regulatory clarity on the use of stable coins. But I think the real potential here is to unify a very fragmented payments landscape, if that makes sense.
This makes perfect sense and in complete agreement in how you put it eloquently for us. The purpose of all of that technology advancement and further adoption is faster, more accessible, and more inclusive financial future. I think that we see the world very similar. Any closing remarks? Anything that you want to leave us with, the team, as well as our listeners?
Yeah, absolutely. Thanks for having me on. I think the closing remarks, and just from like a venture perspective and my own personal views, is that certainly there's a lot of kind of chat and hype about crypto, stable coins. What you need to really look at is where does this technology specifically actually solve real pain points? And you got to think deeply about why is it solving pain points? So like, is it more cost effective? Is it faster? Sometimes that's really not that important. Is there deeper liquidity? So it's kind of great to embrace new technology, but really need to think deeply about how that new technology, like specifically crypto and stable coins, actually can provide a value into who, whether that be consumers, and what are the alternatives for them, and why are they using specific technology. Kind of specifically with stable coins, and especially in the global south, this is actually it's an easier way to access the dollar, right? It's a quasi cash like instrument. And that's why we see kind of deeper liquidity, right? So that adds certain challenges to it, certain risks associated with that. But that's kind of what at least I try to do as investors, is really to see kind of the long-term potential and the value add. So we're just, for all kind of listeners out there, to really, I guess, question why things are being adopted and where it's going.